Hello, everyone, and welcome to the Mainstream Mortgages podcast. My name is Peter Paley, and I'm here with my two business partners, Colton Boudreau, Derek Vandal. And today we are going to be talking about what you shouldn't be doing after your mortgage is either pre-approved or final approved, because you can still mess up your mortgage and not have your mortgage fund. So let's get right into it. So, you know, our whole mortgage process is really based on education and guiding our clients through making sure that people don't mess this up. So there's our five or six major things that we do in our mortgage application, and I just want you guys to touch on what are the common mistakes that people do make and what they shouldn't do when it comes to these things. So our first section is going to be income and employment. So Colton, please tell me what you shouldn't do when it comes to your job or income from your job.
Yeah, so when it comes to your job and your income, what you shouldn't do is one, you shouldn't reduce your hours and not tell us. Two, you shouldn't quit your job and not tell us. And three, if you're thinking about just switching jobs or maybe even positions, you should let us know. Um, some lenders care about these things, some lenders don't. And obviously, we need current income to use in your application. So just outright quitting because you feel like it and still wanting to get a mortgage just doesn't add up.
Right. So first thing, do not change your employment, your job, or reduce your hours. First thing you shouldn't do after you're pre-approved. Derek, the next thing, which I'm going to share a story after, is about your down payment and closing costs. What shouldn't you do as a borrower when it comes to your down payment and closing costs?
Well, I think the most obvious one is don't spend it. Obviously, you need the down payment funds and closing cost funds in order to close the transaction of your purchase. So that's a big one. But a lot of things, or some things that other people don't think about, is transactions. We do need to see the transaction history for any kind of down payment funds and closing cost funds most of the time as well. So if there are any large deposits in your accounts that we can't really account for, then that could jeopardize your approval as well. So not to say that you can't make transactions within your own accounts, but if you do, or if you want to, let us know first, and we'll kind of guide you through that process.
That is actually going to be my story is about the down payment, where we had the down payment all figured out till the beginning of the current month, and the client um, transferred in about $14,000 from out of country account and didn't tell us, even though we told them not to do it. They still did it, and the whole deal fell apart. Like there was no saving it. It did not meet any money laundering requirements. They were having a hard time verifying the account, and we talked about it in our down payment issue. It was from a South American country that had pocket accounts that couldn't be traced. So it was one of those things where it was an unfortunate error on the client's part, but their whole file fell apart. So I just also wanted to add one thing in there, which isn't really a down payment thing, but it kind of fits in there. Don't go away on vacation if you have to sign documents or take possession of your house. You need to be present to do this, to take your keys, sign at the lawyer, have all your ID verified. It's not, oh, I just bought a house. Well, let's go on vacation and hope it all works out when I get back. No, you have to really make sure that you're present. Okay, Colton, our next biggie, the biggiest of them, in my opinion, is your credit score and your credit bureau. What shouldn't you do with your credit score and or credit bureau?
Essentially, not make any changes, right? Don't get a car loan, don't rack up your credit cards to buy new furniture or whatever it might be. Any changes in your credit can impact your score negatively. And if it impacts your score, we could have issues. And also, if your debt load just goes up in general, like the car loan, or you're racking up your credit cards, like that could push your ratios over on our end, and maybe you don't qualify for the house, which creates a huge issue on our end and then your end. And how are we going to solve that? So checking with us beforehand, like, can I afford, to maybe take out a car loan? We always recommend not beforehand, but check before. Um, Buying the new furniture or the fridge or whatever it might be, just wait till after you close on your mortgage. It's always the safest thing to do.
And the worst thing you can do is a buy now, pay later credit card. You think you're good, you bought it now, you're not paying for later, but it's going to show up on your credit bureau. And if you add $10,000 and you can't qualify for that on your mortgage,
And
it,
also opening new credit cards at the time of approval can
yeah.
impact your score, right? So just hold off, even though it sounds like a great deal, or whoever's pitching what on the credit card companies, just wait or don't do it.
I always joke with our clients, like, just pay cash for everything. Go withdraw a couple $100 and pay cash. Don't put it on your credit card. But maybe not, it's a little extreme, but like it's really important that people understand that you don't make major changes to your credit. And I know this is kind of goes without saying, and it might seem like a real common sense kind of thing, but your offer to purchase. A lot of people will make changes to their offer to purchase and not let our mortgage brokers know. And it could really cause you some serious financial woes or delays. So, Derek, back to you. What shouldn't you do on your offer to purchase after your deal's been finalized?
Well, most of the things are doable, but as you said, Peter, you need to kind of contact your mortgage broker to check in first to see, what that process kind of looks like or if you'll qualify for those changes. So one of the changes would be changing the closing date, the possession date. Sometimes we need a certain amount of time to close. And if you want to say, oh, well, I want to change it to tomorrow, well, that's probably not doable, right? So that one also, and on the other side of that, if you change your possession date to be more than 120 days from today, suddenly we can't lock in a rate for you at that point. We can only lock in a rate within the 120 days. So that could change things as well. Another change is obviously the purchase price. If for some reason the purchase price changes, that's a huge deal for the lender. First of all, they're going to ask why. Why did the purchase price change after everything was accepted? That's an important detail. If there was some sort of property defect and the purchase price went down because of it, now the lender is going to want to know, well, what are the details of that property defect? And that could jeopardize your approval just in and of itself.
That could
Um,
open up a whole can of worms. I remember we were doing a mortgage out here in Gimli, and the realtor found a defect, thought she did a great job, got a $2,500 reduction in the price, and it opened up a whole can of worms where appraisal was required. It eventually led to an engineer's report being required. It added 4 weeks to the closing date. In that case, it all worked out okay, but I mean, like, what was that $2,500 price reduction worth spending 500 on the appraisal and 1,500 on the engineer's report? Not really. I
yeah.
It's one of those really important things that before you do really anything that's regarding this whole real estate transaction, that you talk to us first, because the tiniest little thing which you think's not a big deal, and really it probably shouldn't be a big deal, can be the most humongous deal that could really affect your approval and when you're moving in. And time is money, right? So if there are delays, it's not costing me money. It's not costing the lender money. It's going to cost you, the borrower, money. So it's really important that you understand what your roles and responsibilities are in this whole process and transaction, and that you kind of stick to the guidelines as close as possible. Another big delay is people delay in getting their fire insurance. Once you have your final approval, like, start shopping your fire insurance or your homeowner's policy insurance around, because you're going to need that. Um, Usually the realtor and we as the mortgage broker and the lawyer are on top of you to do that. But that's another thing that can really cause large delays. And I just sort of wanted to circle back, if you don't mind, back to the down payment and closing costs and why we're so diligent about making sure all the big transactions are accounted for and meet all the anti-money laundering guidelines. But like a lot of people don't realize, if you have a RSP or a GIC or a locked-in account or a lot of other investment vehicles, you may think you have the money, but you may not be able to access them for your down payment, especially when it comes to work pensions, locked-in retirement funds, and GICs. A lot of banks and credit unions have non-redeemable GICs, and you think you can just take it out, and they say no. And we need to verify all that stuff up front. So it's just one of those things that we always coach our clients as part of the process. Not only is your rate and your down payment and everything comfortable and you have a mortgage, but all these things that you still can do that can totally mess up your mortgage after we've given you the approval. And everything we talked about on our list today, I've actually seen in real life where somebody has made the mistake. And that's why we have this list of what not to do. Anything else to add, you guys?
The only thing I would add about the offer to purchase, and this one might seem obvious, but I think it's not so obvious to some, is changing the purchasers on the offer to purchase. Like whoever the purchasers are on that offer to purchase need to be on the mortgage as well. So if you're changing that and not telling your mortgage broker, it's also kind of a big deal. Last little thing I'll kind of note, based on what Colton was saying about, don't buy a car or don't get a car loan. Um, that's something that it's interesting because my wife, when she was going through her mortgage approval process, her car broke down and all she could think was, I need to get a new car. She wasn't thinking about her mortgage, right? So it's kind of interesting when you're going through this mortgage process, you kind of have to put your brain into our world, so to speak, and start thinking about what could affect your mortgage approval. Because yeah, there are things like the car thing. I need a car. I need to get to work, right? But you need to think about how that could affect your mortgage approval if you get a new car loan. That's all I have to say.
And just so everyone knows that every lender in the country can pull your credit at any time up until your possession date, even after your possession date. And depending on if land title has transferred and whatever, and you've even made a change after your possession date, like before the first payment's taken, the lender may be able to call their mortgage back. I've seen it twice in my life. It doesn't happen very often, but I mean, it is possible that you are aware of everything that can happen. So even you move into your house, you get the keys, and the lender can still boot you out, and then you're in a real pickle financially. And I think let's end it there, unless Colton, you had one last little thing to say. So thanks for tuning in today. Again, we're Dominion Lending Center's Mainstream Mortgages. If you have any mortgage questions or scenarios to run by us, you can call us at 431-482-2187. You can also text at that number or email us at greatrates@mainstreammortgages.com. Thanks for listening today.
Thanks, everybody.